What's going on, guys? It's E is Profitable. Today's March 13th, and I took two very clean setups today despite the market being a little bit funky. Tomorrow is actually CPI. I don't trade during CPI. That's very it's high impact news. The market tends to be very volatile, so I wanted to catch something today before tomorrow, and I actually did. These two trades I actually sent to my Discord group. You can see, let me go into the indices chat room. You can see right here. Let me go ahead and scroll up. You can see right here we're at 9:27 a.m. where I sent this screenshot of my chart. I was targeting sell side liquidity. I had TP1, TP2, and TP3. The market made it all the way down to TP2. Almost hit TP3. It didn't. I did take profits along the way, and I trailed my entry. The market did end up reversing before hitting TP3, but that was fine. I had at that point I had made $1,700, which was pretty good. And then later on, and during the PM session, I got into some more sales. You can see right here where I sent it to the group at 3:03 p.m. I was targeting sell side liquidity again, and you can see where I'm following the market, sending screenshots 3:25 p.m. and then you can see where there was another opportunity for anyone who was looking at this to get in as well. I had marked it for them. You see where it says if price comes up to this 1 minute fair value gap and holds, I'm taking more sells. So I added to my position there, and you can see where the market very beautifully took out sell side liquidity. All right, so let's go back to the charts. I'm actually going to go over with you my thought process and why I took those trades. All right, so let's get straight to it. These videos are meant for educational purposes only. Any trades taken in the financial markets are under your own discretion. The information taught should be demoed and only taken to live accounts under your own responsibility. E is Profitable will not be held liable for anything you do with the information presented. All right, guys, so we're here looking at today's chart, and you can see in the morning where the market had tapped into a 5-minute fair value gap, 15-minute imbalance, same thing, and it took out sell side. Normally, when I see the market expand lower and I see it retrace, I look for a continuation. Most people look to buy bottoms and sell tops, and I found with experience that the market has a tendency to continue lower or continue higher to take out those people that are looking to sell the tops or buy the bottoms. So when I saw the market retrace, I saw a 3 Indian pattern. You can see where the market went up once, twice, and then 3 times. On that third time, the market tapped into a 1-minute order block. At the same time, I noticed that there was SMT divergence. If you look at NASDAQ, you will see that NASDAQ, you see right here, NASDAQ made a higher high while S&P made a lower high. So that's SMT divergence. I went ahead and had that marked, and I started to look for sales. So in this case, I actually went down to a 30-second time frame. The market just looked a lot better for me on that time frame. It just made more sense for me to trade from there. You can see where this was a fair value gap that the market broke through it, so it became a balanced price range. Once that happens, we use that as resistance or support, depending on what way you're trading. In this case, it was resistance. In the same time, it created a 30-second fair value gap, so that was like a double confirmation for me. I took the sales to target again TP1, the sell side liquidity, TP2, sell side liquidity, and TP3, I was looking for the market to go lower. So again, I took out profits here and here, and then once I saw this big candle, I gave it a little bit of a chance, and then I closed my positions there. The market reversed completely, that's fine, and then I just waited for the PM session. I took this trade around this 1-minute fair value gap. I noticed that again there was SMT divergence in that area. I can show you that right around here. If you notice, from this high to this high, for the S&P 500 it made a lower high. For NASDAQ, it made a higher high, and that's like that. All right, so once I saw that, I had it marked. I looked to see if the market was it was ready to break down lower. I had marked this buy side liquidity, so I know the market took out buy side and there was still a ton of sell side liquidity left to take. Another thing that I noticed that I liked was that the market created this like equal low, relative equal low. So that's the algorithm creating liquidity to target later. So I got my first entry right here on that 1 minute fair value gap as the market broke down and retraced some. That's where I sent to the group and I said, hey guys, if the market comes up, where's it at? I said, hey guys, if the market makes it to this 1 minute fair value gap, I'm going to add more sales to again target these relative equal lows. This was also like a trend line liquidity. That's how retail is looking at the chart. All right, so again, once the market made it to that 1 minute fair value gap, I dropped down into the 15-second. Again, the market looked very clean on the 15-second. You can see it right here. Clearly how I tapped into that 1 minute fair value gap and then we broke structure to the downside. It created that fair value gap, tapped right into it to target what again? To target these bottoms right here. That's where money was sitting. All right, and then I closed all my positions there because again tomorrow we have CPI and I do not trade during CPI. So again, those were two very clean setups today that again was sent to the Discord group. All right, guys, so I just wanted to go over that with you just so that you had just an idea as to like what was my thought process behind it and why I took those trades. Just, you know, keep in mind that when you are trading, you want to look at all time frames, 15-minute, 5-minute. You kind of want to switch in between time frames and see how the market looks. Sometimes you got to zoom out a little bit, make sure you're on the right side. You know, pay attention to the flow of the market and where it's headed. Don't try to catch bottoms or tops, you know, kind of just trade with the market. Look at the chart as in where is liquidity and what liquidity could be taken next. If you notice here, we have sell side liquidity that the market can take out. We have buy side liquidity. So it kind of stayed in the middle, and that's that was done strategically. That's why tomorrow a lot of people get chewed out. So if I had to bet on any side, I would say that we're going to crash tomorrow. There's daily lows, monthly lows sitting below here, and it just looks to me like the market is going to target that tomorrow. So we'll see what happens. All right, guys, so I hope you got some value out of this. Again, don't forget to subscribe to the channel, and you have access to my Discord via the link in the comments. All right, guys, have a good one.